welcome back to the Comstock channel. My name is Brian Hendrickson. Due to blizzards, Eric is not able to join us, but Justin and Matthew are both able to join us today to kind of take over. Welcome, welcome.
Hello, how are you doing?
Justin, you're the one with the snow, so Matthew's all excited. He's like, I don't have to deal with the snow, so.
Yeah, that's true, but I guess we're mid-January. I'm trying to be glasses half full, that winter's half over, and not just getting started. So here we go, middle of January.
You think it's half over. You don't know that. We could get snow in late April yet.
Well, and that would be one catalyst that would probably help our commodity markets out. But we can get to that with the USDA and WASDE report out today.
Yeah, you guys had a busy day, like you said. WASDE, crop production report, grain stocks all came out at 11. So busy day. Let's go ahead and dive in. Justin, Matthew, whoever wants to start.
Go ahead, Matthew. You are the South American bean resident or expert there. Looking at for the week, we ended up beans down 32 cents, closed on the March contract. January is going off the board, but 12.24 and a quarter. As we dive into these numbers, it'll be interesting to see what you have to say about these, Matthew. I know you put out a couple podcasts about these or YouTube videos, but what did you think of today's USDA report?
Well, I mean, overall, it was disappointing. I think it was a bearish surprise, right? I was kind of thinking we were finding our bottom, and it was a little bit of roller coaster. An hour after the report came out, it was like, oh boy, here we go again. But all things considered, we bounced off our lows pretty well. We fought back, and so I like it when we have those long tails on the charts the way we do. That you probably have them in front of you better than me, but and the beans, we bounced 20 cents off our lows. And so that was kind of good to see. But yeah, I mean, the report was surprising just because they increased the yields so much, which seems hard to believe, and I'm probably going to have a lot of people scratching their heads, what's going on here. But the USDA basically said that we had a record all-time yield in corn, right, at 177.3 bushels per acre. They increased it 2.4 bushels per acre. And just considering I don't think anyone thought it was going to be a disaster year or anything like that, but it just seems hard to believe, considering the drought stress that the crop went through. If it is legit and that's the real yield that we got, it kind of makes me a little bit concerned going into the future, right? If we have more ideal weather conditions, what's the yield going to turn out to be? Getting 182 bushels per acre doesn't sound so far-fetched anymore. If we can get 177.3 record yield in adverse conditions like this. And so, the only thing that really saved us was they cut the harvested acres by 600,000, almost 700,000 acres for the corn. And so if they hadn't done that, we would have, seen the market down double digits today. So,
we did end up down double digits, but so I'd peel that layer back and I look at all these things and looking at the report, yes, it did take an acres cut, but we really didn't see a stocks change. And to me, as we move forward, that's going to be important. Exports, we are competitive. Everybody has been talking about that for a while. The question is, when does China show up, if they show up, to take some of the surplus off our hands? And I thought it was pretty positive. We know ethanol has been fairly decent on the grind lately, but the fact that we left carryout relatively unchanged, we did trade lower today, but we did bounce off the lows by 6 cents. So going into Tuesdays, it's kind of a question of, have we put the bottom in, right? Or have we done enough to spur demand?
Well, I mean, we're in this situation a couple months ago, and I think a lot of people, and probably myself included, thought we would have put the bottom in. But yeah, there's a little bit of a bullish divergence in the stochastics today, which, it gives me a little bit more warm, fuzzy feeling that we put the bottom in, at least temporarily. But like you said, okay, now we know what the production side was after today. Finally, it wasn't good, but we know what it is now. And so now we need the demand to kick in and exports to start to pick up. They did increase the ethanol consumption by 50 million bushels, which was good. They didn't mess with the exports. And so there's plenty of time yet for that. Our peak export window is in kind of the first half of 2024. So we hope to see some improvements there for corn.
And moving forward into historically not a great time to price grain. We're moving into the crop insurance pricing. I don't know that we need to have an acres buying session as we have in the past, but I'm cautiously optimistic that as we move forward, we get some more of those seasonality markets, at least to help us out on the corn. The 177 doesn't necessarily surprise me as a yield for the most part. There were pockets of poor corn out there, but the majority of the people I talked to were, even the ones that were down from their APH, still pleasantly surprised with the yield this year. So I think all in all, USDA probably, that's probably the number. Well, it is the number we will trade moving forward. And hopefully we can get some demand to pick up or some fresh news out of South America to get those funds to start covering those massive shorts in the corn pit.
Yeah, domestically in the soybeans, it wasn't great news. They increased the yield 0.7 of a bushel, which I think surprised a lot of people too. Took us to 50.6 bushels per acre with the soybean yield overall. But again, what saved us was they cut the harvested acres by 400,000 acres in the beans, and so that added 36 million bushels to our overall production. They didn't really make any changes to the exports yet, but it tacked on another 35 million bushels, which historically probably wouldn't be that much. But when we have such tight stocks in the soybeans the way we do now, it took us from 245 to 280. That's not good, and so we need the exports, something to kick in on demand, and so a lot of people are going to go back to focusing on weather in South America again, and we threw together a chart here that kind of shows you what the soybean bears have been pointing out, that there's been some inclement weather in the center west region, and we've talked about a lot in our report. And it probably has shaved off some of the yield in Brazil. But if you combine the three main soybean production countries in South America, Brazil and Argentina and Paraguay, it still adds up to a bigger crop overall than what we've seen in previous years, just primarily because, for one, Argentina had such a bad year this last year due to drought, and they can effectively double their production from 25 million metric tons to 50 million metric tons for this year. And so Argentina so far is having a great season to their crop. I guess I expected USDA to make some cuts, but I didn't expect them to drop it to what at least I think is reality and what a lot of the private estimates are out there. They were at, I think, 161 last month, and they dropped it to 157. I think I'm at 153, and we're going to go take a crop tour here in the next 10 days and take a closer look and probably end up revising that lower yet. There was actually a private estimate that came out yesterday that was the lowest that I've seen so far, that was at 143 million metric tons. So that's 15 million metric tons less than what the USDA just came out at. So they're lowering their yield. It's just they drag their feet, and it takes so long for them to catch up to where a lot of the private estimates are at. So I still think if that were to happen, I'm not saying that the crop is 143 million metric tons, but I also don't think it's 157 what the USDA came in at either. And so I still think there's more cuts to come. Maybe Argentina offsets that a little bit, but we're supposed to get a return to maybe some dry weather here next week in Brazil, which could offer up some price support to the bean market. But anyway, that's what the South America crop overall is looking like, and what I think the market bears are pointing to.
Well, and you saw a 2 million metric ton increase in Argentina production, up to 50 versus a 48. So the thing that I take home from the bean market, yes, we're down 32 in the week in the March. But the positive is, and I feel like I'm always the glass is half full guy, but we are 21 and a quarter off of the low of the day. So we flushed out, did we run some stops lower, find a bottom, find a place that the funds, maybe push pause the algorithm traders that see those big numbers flash and immediately trigger sells. Do we find that clean out where we can possibly grind higher, or at least put some risk premium back in the market? It really doesn't feel like there's a lot of risk premium in the market when we move lower that sharply on the week with so much uncertainty in South America yet. Argentina being better, great. Brazil, I don't think anybody buys a 157 number like Matthew said. So is it 151? Is it 148? I do think that matters, and I think it's just a matter of time before we get there. Keep an eye on the export sales moving into next week. If we start seeing some flash sales pick up, probably that would be a very good sign, in my opinion, that we have gotten to a bottom, or at least close to a bottom in this thing.
Justin, what do you tell people that still have old crop sales? I mean, even ourselves, I mean, we're in this situation where I think 75% sold in our corn, and based off of the price action today, we probably wish we were 100% sold. But I mean, for those looking for clean up old crop, I mean, what do you tell guys to do?
Well, first off, here we go, right? Like, everybody's sitting on probably 80% of their production, very little sold. Moving forward, I had quite a few conversations today. We did buy some short dated puts ahead of the report just to prevent a washout or a run down on stops. The basis in your area is, if it's relatively firm yet, I don't like the price, but I wouldn't let a good basis slip away. And the reason I'm saying that is, after my 18, 19 years of being in the cash market, we do have a 2-1 carryout. Okay, regardless what the funds do, regardless if we move this thing higher, the USDA just told end users that they're probably not going to have to get super aggressive on the basis, right? So if there is a good basis number out there, you can go ahead and take a look at that or give us a call. And there's some things we can do on the top side with either buying a call or doing some sort of option strategy. If you want to remain in the market, I have some guys that are doing that. Sold some old crop corn, did some July option strategies. And looking at this thing is, we have 80% of last year's crop to sell and 100% of what we're going to grow next year. All of those numbers underwater. So, if there's something that looks attractive, don't be afraid to take advantage of it. We have a ton of bushels we need to market yet on the corn. Don't let that slip by. On the soybean side of things, I just think that timing wise, we probably need to start looking at getting something on the books. It seems to me those soybeans, if we don't get them marketed into February, you're going to end up carrying them into that July, August time frame, either being a zero or a hero. And the cost to carry on those soybeans at 7 to 9% interest, which we've talked quite a bit about on the Comstock report, but those costs really do add up. So I guess I'm focusing on basis. If basis numbers are good enough in your area, we're probably going to start moving some grain. If there's something we need to re-own, we can definitely, or some sort of option strategy, either re-own it or otherwise take a look at that on an individualized basis. But everybody's fairly undersold on the corn, more so than the beans, which is another reason I thought maybe beans would maybe make a little bit move higher. But It's awful hard to get the board to rally when the farmer owns this high of a percentage of the crop.
This just kind of snowballs the problems that we're facing going into new crop in the 2024, right? Because I don't see anything changing in the long run, and in terms of our carryover, can actually get even worse. And so I guess my impression, and you tell me if you agree with this or not, would be that we want to be more aggressive, advancing forward crop sales, before planting season really takes off here, because we saw that last year that we didn't even get to spring planting and the price kind of tanked by early March. That they were looking at the weather forecast 2 months out, and they got a whiff of good spring planting weather, and that was it. That's all the market needed. It just tanked. And that's what my concern going into this again is, you can make the argument that, okay, we're going to cut corn acres and increase bean acres, but it's still not enough, especially if we get a trend line yield. We're getting this 177 plus bushel yield and arguably rough years. I mean, what if we have a more ideal season, and so there's still a good argument to say that, this can get a lot worse long term before it gets better. And so I think we want to be prepared for that.
I would agree. First and foremost, we have the crop in the bin, right? The interest clock is calculating, the calendar's flipping over every day towards closer to springtime. And that's why I'm saying, we have 2.1 billion carry out. If there's a basis number out there, it's probably time to take a look at it, if it's still relatively decent at your local market.
Yeah.
The new crop, even last year, you throw that out there that we trended lower, which is true. We did trend lower, but we also did have an opportunity in June to go back and sell levels above crop insurance levels. So I'm cautiously optimistic on that. We have no idea where the crop insurance level is going to be, but seasonality, we do have a little bit of time on that. So while I'm putting offers in, I'm probably not jumping off the top of the leg yet.
Question I might have for you, Justin, is we haven't talked a lot about the managed money and what effect that's having on the market too, because I feel like, we talk about all these fundamentals and, in terms of the yield and what South America's going to do. But at the same time, I feel like the managed money has been grabbing a hold of this and selling record shorts and driving this market further, and they're the ones that I feel like are driving this train, steering this vehicle right now. And do you see that changing? Because I know Joe talked a lot about the managed money and what those levels are at. And so is there an argument to be made that, okay, we're reaching levels where we're very heavily short. A lot of those guys are going to start taking their profits and getting out.
So obviously I don't know when that's going to happen. I wish I did, but I was going to save this comment for the final conclusion when Brianne asked what we thought about the week, but I will back this. I'll use it right now. So many times I've seen bear markets put a bottom in, put a reason for the funds to stop selling it on a bearish report. It is a futures market. It's known. We know the number. It's going forward. There's still a large swath of the Corn Belt that's dry. Granted, it's too early to talk drought, way too early to talk drought or any sort of planting weather. But December corn at 481. Yes, we could be looking at a 2.2 to a 2.8 carry out next year. But you also can't, at this time, discount a 1.4 or some sort of disaster. And priced in there at 481 today, it doesn't feel to me like that's fairly priced at this time, or the risk. And we talked earlier, and I know you've talked quite a bit about it, but the safrinha crop, if we get less bushels down there to export, will that push some of that third quarter business to the United States? August, September, we sometimes in the grain business have second harvest where you see bushels move just to make space and move at a relatively reasonable price. So will those exports come slamming to the United States? I don't really know, but I will say in my 19, 20 years in this, a lot of bear markets have been killed by bearish reports.
All right, let's kind of wrap up a little, but let's not forget about livestock. Justin, I'll let you take the boat on this one.
Well, here we go with the blizzards out west. We had slower harvest this week, backed up. Nobody wants to deal with the pen conditions or trying to truck cattle down the road, things like that. We did see smaller kill numbers for the week. Fat cattle ended up 80 cents at 170.90. Choice select. The one thing I want to point out, I know Eric put a slide up last week about the choice box beef and the rib dropping over $100. We have seen a nice rebound. Today at the midday, the choice cutout was $289.58, up $369. That we printed, I think it was last week, a $278 on that. So we are seeing some rebound in those higher end cuts, pulling those choices ahead. Packers still losing money. Feeders not very happy. It's kind of who's going to blink first. I do think once we clear out these storms, which we always have winter storms, it happens. But once we clear out these, there is better days probably coming in the cattle market. It just may take a little bit of time to chew through this inventory.
All right. Overall, how do you guys feel about all the reports coming out this week?
Well, I thought it was terrible. The stocks or the reports.
It was terrible, but it's out of the way, right? That's the only good thing about it. It's past us. Hopefully, most of the negative news is in the market now, you would think. And so, I would advise people against panic selling. I always hate that because it's hard to not be emotional when the price is dropping 30 cents at one point in the day, and so I would just advise people to try and avoid being emotional and avoid the panic selling and kind of look for that seasonal to kick in, as Justin talked about.
Yeah, watch your basis. If there's a number out there that looks attractive, give us a call. We can always do something in the options market. Hopefully we have better days to come. I don't know why every time I'm on here it's down hard, but I guess that's just the way it is. Eric will be back hopefully next week, and we'll have some more positive news to talk about.
All right, that'll do it for this episode. Hope you guys have a good weekend. It is a 3-day weekend just for our viewers and listeners. So we will be back Tuesday. Justin, hope you don't get snowed in. Matt, I really enjoy the sun.
Yeah. All right. Thank you, guys.
You too.
You can find us on Facebook, YouTube, and TikTok.